Okay. Yay. Here we are with Preston and Loon. Preston, welcome to the Defiant podcast. It's great to have you.
Hey, great to be here.
Yay. Okay. Preston is the co founder of Prismatic Labs, which is one of the core teams building ETH 2.0. And he's also a co founder of Cryptex, which is making a token which represents total crypto market cap. Really interesting stuff. We will, of course, get into both of those projects. But as always, let's start with you. I'd love to know, well, yeah, get to know your background, how you got into crypto, what led you to co-found Prismatic Labs, and then we'll get into Cryptex as well. So let's start from the beginning.
All right, the beginning. So I'm Preston Van Loon. I'm a career software engineer, interested in tackling high impact and difficult problems. So I was working at Google for some time, and in 2017, I was introduced to Ethereum, and it was really the first time I had taken blockchain seriously and really looked at what it was and what it could be used for. I'd heard of Bitcoin, but it didn't seem as interesting to me. I saw this just a bubble thing, price goes up and down, and didn't seem to really fulfill some of its core goals of being peer-to-peer money. So looking at Ethereum, where it's really more of an application platform and really has a lot more use cases than just peer-to-peer money or sound money, or however you want to think of Bitcoin. So yeah, 2017, this was the time, last market cycle, ICO craze, things were going crazy. CryptoKitties, stuff like that. We're seeing the blockchain, Ethereum, really max out its throughput. Really, I think for the first time in such a way with all this public activity. And I said, wow, this is really a really interesting technology, but it's actually not quite ready yet for the level of activity that it's getting. Right? It's if CryptoKitties, the single. We at the time like to blame them for their success. If a single application can really cripple the throughput of Ethereum, well, it really has a long way to go. So I started trying to get involved, just trying to see how can I contribute to open source technology. It's really a fulfilling thing to do. And I found that there's this effort called Sharding that can take Ethereum and split it up into multiple independent shards that sort of increase the capacity by the number of shards that you have. And I saw that it wasn't quite, the specification was kind of there, but no one was really making substantial progress. I met Raul Jordan online. He and I were asking the same questions around the same time of why is nobody building this and who wants to build it with me. So we linked up a couple of days later in New York City and said, you seem like a cool person and you think I'm a cool person. It's kind of like a first date kind of, so but we went from there. We said, you know what, this is a really great opportunity. We're both hungry for some high impact work, and let's just start building it and see what happens. We ended up getting a great group of people asking around on Reddit and in the Go Ethereum forums and things like that. And since then, we've just we thought, okay, this will be a cool Moonlight project, and we'll do it just for fun. But we started to see opportunities where it could be grant funded. And so we started to receive grants, and we said, wow, this is crazy. I'm really interested in it, but it wasn't quite enough to leave Google. Google's a pretty heavy anchor to be moved from. But towards the end of 2018, we had been working on it for about a year and taking it very seriously and really producing content and showing the community we're serious about it. And I think one of the big driving factors was we were talking on Twitter as we do. People were complaining what's taking so long, and I said, well, we are all mostly at Prismatic Labs working on it part-time. We still have full-time jobs because we're not crypto rich or anything like that. We just want to work on it. And I was making dinner, and then my phone starts blowing up, and I see this tweet from Vitalik that he sent us 1,000 Ether, which was around $100,000 at the time, with just the word YOLO in the tweet. And it was kind of like now like a really famous thing that he just sent us like this, crazy amount of, I don't even know what it's worth now, but that was a huge signal of support from Vitalik, the founder of Ethereum, and the community in general, that we were getting these grants.
That was just like, I remember kind of being on Twitter at the time and seeing Vitalik do this. Like it just completely blew up, like that YOLO tweet. I think, I don't know, it's kind of like been in kind of the meme like a Hall of Fame, I guess, by now. But yeah, like he gave Prismatic Labs 1,000 ETH and like a couple of other projects working on ETH 2.0, other like 1,000 or so ETH or something around that magnitude. And was that kind of like the final kind of push to leave Google?
Yeah, at that point, with the combination of the grants from the community, like random donations, the Ethereum Foundation starting to give us substantial grants, and there was also the Ethereum Community Fund, and then this final push, from Vitalik. I stuck around Google for just a few more months. I think the YOLO grant was in October. I stuck around to the year end to be eligible for Google's year-end bonus. But as soon as I was out the door. I would think I was out the door as soon as I saw that happen, but I kind of had to stick around and finish out a few things.
Right.
And we've been working full time ever since the beginning of 2019. So basically two years at this point. And it's been just an incredible journey building ETH2, very fulfilling as well.
Okay, so definitely want to know more about the latest on ETH2, but just to dive a little bit on just like your transition from Google to a full-time crypto. First, like what inspired you to leave like this job that I guess like most software engineers would kill for? Like what was it about like open source or Ethereum or crypto that like really inspired you?
Yeah, I love this question because I thought Google, was really kind of an end goal for me. I got there and I said, I'm going to stick around here for a really long time. The longest job I had was a year and a half or 2 years, something like that. Pretty common in tech. But at the time, Google was maybe 70,000, 80,000 current employees, something like that. I think it's maybe like 250,000 now. They've grown significantly. And when you get to that kind of scale, and I was working on ads, which are not that interesting of a problem, but when you get to that scale, you stop feeling like you're making a big splash. You more feel like you're sort of a cog in this great machine. The analogy I had conveyed to some people at the time is that I felt like I was working on the Titanic, this great massive ship, but I was like redesigning the doorknobs, which already worked and they were fine. And the ones I had replaced them with were much better, let's say more efficient doorknobs, right? But it didn't really feel like it was high impact, right? Where something like building ETH2, which seems like an incredible and global impact, that was just extremely attractive. It was just, looking at that just from the giving an open source and working with a lot of new people, smart people, and solving really unique and novel problems in computer science that really only exist in a place like Ethereum or a decentralized application platform.
Yeah, no, that makes a lot of sense. I mean, like the potential to make a big impact with something that's so new as Ethereum, and also that has the like the ambition of being just like the base layer of everything, of like a new internet. That is like pretty compelling. Good selling point. um so okay, so then from kind of that time in Prismatic Labs to there, like what how has the ETH2 roadmap uh evolved, because there's been so many changes along the way on how ETH2 looks like, and like when it will be shipped, and like all the different phases. So I guess like it would be a lot to just like uh, dig digs very deeply into like all the transitions, but maybe like if you can go through kind of like in broad strokes, kind of what the idea was back then and where we are now.
Okay, sure. So I'm going to try to remember all of it as best I can, because it's changed so many times in the last 3 years. But when we started, proof of stake was actually on the cusp of becoming its own thing, right? There was in early test nets with Casper, um, and that was actually getting ready to launch independent of sharding. So the early designs were really sharding only, and then we were finding that a lot of the design patterns were shared with the Casper proof of stake that existed at the time. So those things started to merge. I think that was the first complete rewrite of the spec, and then we've had a couple more iterations of the spec where we had to start over from scratch with Prismatic. At Prismatic, we were always trying to stay ahead of the curve, and a few times that meant that we had to rewrite everything. So yeah, it's changed a couple times since then. When we launched mainnet, the beacon chain in December, we had really 3 distinct phases, and then a 4th one was added. Those were phase 0 being the beacon chain, phase 1 being introducing the shards as like a data layer, then phase 2 being state execution within the shards. And then we inserted a 4th thing called phase 1.5, which was, okay, let's merge ETH1 and ETH2 before we get to phase 2. And then the most recent update is we said, you know what, we're not going to call them phases anymore because we keep changing things, right? We're not going to call them phases anymore. They're just because they really could be done in any order, and they're kind of independent. But now what we have is we have the first part, which is beacon chain. We have the merge, which is the big thing coming this year. We have the introduction of the shards as a data layer, and then we have this optional thing where we could add the state execution and have each of the shards operate as its own independent kind of Ethereum space. But we're thinking that now with some of the recent breakthroughs in layer 2 scaling that would leverage the security of ETH2 or Ethereum rather, we may not need that anymore. We can commit these connections between layer 1 and layer 2 with just the data layer of sharding, and still get the incredible throughput that's required without having to go through even further ETH2 development.
Okay, wow. Definitely want to dig into that last part, but just,
Yeah.
because I know that as my listeners are, I have like a great mix of people listening to the podcast. Like some are like complete newcomers, some are really deep into the space. So breaking it down a little bit. So of course, ETH is transitioning into ETH2, which now has a new consensus mechanism called proof of stake. That's a lot less energy intensive compared to proof of work, and hopefully more decentralized, because anyone can participate just by holding ETH in the network rather than by running like these crazy mining rigs. And so that's already out there. That's already launched, which is, a pretty big deal. Launched in December. You can already stake your ETH. And so what's happening, like this merge step is bringing kind of the current ETH1 chain, like the application layer, and having that merged with the proof of stake chain and have kind of this new consensus like base layer. Is that kind of the right way to explain it?
Yeah, absolutely. Yep. The big thing is getting rid of proof of work. It's expensive. It's difficult to do. If you're not on the forefront of ASIC technology, you're at a huge disadvantage. With proof of stake, everyone has kind of a level playing field. If you can stake ETH, you can do it with any hardware. That's the exciting part.
Right. Okay. And then, so I recently interviewed Vitalik for the Ethereum conference, and he was pretty optimistic on like when the merge would happen. He was saying end of the year, optimistically, but like at the latest, beginning of next year. Is that kind of what you're seeing as well?
Yeah, I think that's a really fair assessment, given that there are testnets happening today. This is May of 2021 right now, and we've had already a few small test nets, and they're getting bigger in an effort called Rayonism, which is kind of a multi month-long hackathon between ETH2 client developers where we're actually testing the merge out. And given some of the history from launching the Beacon chain, I would say that we're about 6 months away if everything goes well, and that's a big if. This is computer science and software development, so things could be different. But I would say 6 months plus or minus 2 months on that.
And so effectively, like what would that mean? So like what would happen to like all the proof of work miners, like, and like how do you just like switch the consensus mechanism?
Yeah, that's the tricky part. I mean, the technical details are there in the spec, and I'd have to refer to it to explain exactly how it works. But the gist of it is that at a certain point in time, ETH1 or Ethereum as we know it today has a block that we're going to consider to be the transition point from the current proof of work mechanism to proof of stake. And there's this concept of like a difficulty bomb, and I believe that has something to do with the upgrade module, where if miners were to continue mining that chain, well, it would just become exponentially more difficult to do so, to the point that it's not profitable, and that chain kind of just dies off. That's always been the plan with the difficulty bomb, is that we need to switch over to proof of stake at some point. So let's kind of have this ticking time bomb, difficulty bomb to get it done. It's been pushed back several times, but this merge is the effort to finally switch to proof of stake.
Okay, so then mining becomes unprofitable for proof of work miners, and then like the application layer connects with like the proof of stake chain somehow.
Yeah, so it really won't feel that different for the application layer. You can think of ETH1 or Ethereum as it is now, continuing in its current state, but instead of proof of work miners producing those blocks, it will be a tightly coupled connection between the Beacon chain. So we really have still Beacon chain and ETH1 running right next to each other in tight coordination. So you're still interacting with your favorite Ethereum client. If you're using Go Ethereum or Open Ethereum or whatever you're using today, it's going to be the same when the merge happens. You're just going to see blocks being produced by stakers or validators rather than mining pools or proof of work mining organizations.
Got it. Okay, and then the next step will be sharding. which, yeah, maybe you can kind of explain what the basics of that is.
Yeah, the idea behind sharding is to, in computer science, we have this concept of horizontal scaling, right? When you have a single machine that is no longer able to process the throughput that you need or the capacity that you need, you add another one, your second computer or machine, and then you have 2 times your capacity, right? In this case, we're talking about storage. So you could imagine that if we have one hard drive, we add another one and so on. Well, in this case, we're going to add 64 of them. And the machine that controls all of that is the beacon chain itself. So when things are written to each of these shards, it's checkpointed or committed in some way to the beacon chain, which is where all the validators are doing the proof of stake work. The validators are also responsible for validating the shard chains, but an individual validator won't need to validate all 64 shards. They will only be validating a small subset of the shards at any given time. So that's kind of the gist of it. It's adding additional data layers to the ETH2.
And the goal of that is increasing scalability for Ethereum, basically increasing like the throughput.
That's exactly right. Yes.
And so so that's after the merge. Sharding is kind of the next step. And then you were mentioning there was this kind of optional additional step. Can you talk about that?
Yeah. So I guess the original idea with this was called phase 2, which is, okay, now that we've set up these 64 platforms with storage layers, now we can start doing meaningful state execution. So those layers will have a state, a world state. They will have accounts and balances and contracts and all of these kinds of things. And the idea there was, okay, well, if we create all of these new independent machines, 64 of them, we could, in theory, process 64 times the throughput. The idea there being that there's a little bit of overhead between cross-shard communication if you're transacting between shards, and it gets a little bit complicated there. But now we're more towards leaning that if, and it's kind of a big if, is that if these layer 2 technologies enable us to get, are able to leverage the shard capacity, the data capacity there to achieve this incredible throughput, then we may not need to go through all the effort of adding more state execution modules and things like that with the ETH2 core protocol.
So it would be like you'd be using things like optimism, say, like the different rollups solutions, to have that kind of be the place where Ethereum applications are running, and then they can like maybe use like leverage shards as well, but it isn't kind of the shards themselves the ones that are hosting these applications.
Yes, that's right. For the most part, I mean, the shards will be hosting the data, or maybe that's the storage, but the execution part perhaps happens off chain in some layer 2, which maybe that's optimism or ZK rollups or something like that. It's still, kind of being defined, and I'm certainly not on the forefront of that research, but that's my understanding today, is that we may not need to go through all this effort if there's already some better solution out there that we can just, leverage in that way.
Oh, okay, that's really interesting. I imagine it'd be like this like multi-layer system then, like you have like the consensus layer, like proof of stake chain, then you would have shards to scale kind of storage capacity, and then on top of that you'd have the, like layer 2, but maybe in this case it would even be layer 3, where you have kind of the execution environment. And it's like all these, I guess, different pieces working together to sustain this incredibly kind of active Ethereum environment.
Yeah, that sounds right. And we're thinking about these layers, but if you look at the all the layers that go into the internet itself, there are many layers there. So thinking that Ethereum is only 3 layers deep is actually not too bad. So I'm pretty excited about that new model.
Interesting. Yeah, that's a good way to look at it, because I was going to follow that up with how this kind of more complicated system compares with like some of the competing layer ones. Like, do you think that they might have an advantage over Ethereum by just like coming out of the box with like technology that is able to scale without all these kind of different additional layers or technologies?
Absolutely. It's Ethereum is at a slight disadvantage, or maybe a major disadvantage, is that we have to consider that it's already out there running, and we need to have a migration path, and it makes things a lot more difficult because with blockchain technology, it's really hard to undo mistakes, especially ones that are at the protocol level. So other chains that are developing similar technology, or let's say they were developing exactly the same idea, they're at an advantage because they can deploy it right away. However, Ethereum has this incredible momentum, right? Everyone's really on Ethereum. All the major DeFi protocols that I see people talking about, they're on Ethereum first, and maybe they go to other chains, cross-chain kind of interaction. But it seems like it would be really hard to build the community that Ethereum has faster than Ethereum can continue to grow and roll out these critical upgrades to the network.
Yeah, I think that's kind of been the most bullish thing for Ethereum. I think, at least this year, is that in spite kind of all the scaling issues with ETH1 and like really, super high fees, high fees are high for a reason. It's because of all the demand to use Ethereum, even as other layer 1 chains are launching and promising so much better throughput. In the end, yeah, like everyone is on Ethereum, and it's just really hard to kind of get that sort of community and activity and just like money Legos connecting together. So it was a huge like first mover advantage for Ethereum to be like the actual like first smart contract chain. So okay, now I'm like really curious to hear how all this kind of amazing, just like foundational work that you're doing with Prismatic Labs, how are you able to find the time to like work on another project? And I'd love to hear how Cryptex came about.
Yeah, sure. I think that it's a little bit of a lack of sleep and a little bit of quarantine. I don't know. I'm very antsy. I want to be doing something all the time, and they're in a time when we're all staying home more and have less to do in the real world. It seems like a great opportunity to focus my idle energy on another project that I believe can have a significant impact. So I first met Joe Sticco, who's the original idea guy behind Cryptex and the total market cap token. And we had met in between the YOLO tweet and my exit at Google. So we met along that time, and he was telling me that he has this idea for a token, some kind of ERC20 token, where the price is directly correlated with the total market cap of all cryptocurrencies, all thousands of them, And I thought, okay, that's a really cool idea. it would be great for retail investors. It's kind of the S&P of crypto, where you can buy into this one thing and get exposure to everything. So you don't really have to go unicorn hunting. You can, if Dogecoin goes way up and you were holding it, but you were holding some index, well, you get a little bit of the gains there. But Joe had this idea, but he didn't really have a solution for it. He just said, I see a gap in the market of a product that could exist, but I don't know how to do it. And I thought it wouldn't work, but I couldn't stop thinking about it. I thought, why can't I stop thinking about this? Like, I have a lot of cool stuff going on, but I cannot stop thinking about this total market cap thing. And over 2 years, we've been going back and forth, just occasional phone calls, emails, not really committing a lot of time to it. ETH2 had been my biggest focus, especially when I was at Google. I would be waking up early before going to work on Prismatic Labs, go to work, come home, work some more, eat some food, go to sleep, and the next day was the same. I didn't really have time for another project, but as after I left Google and after ETH2 had launched in December, a little bit more time to focus on this. So kind of used the same strategy that I had when I was at Google, which is just very carefully focus your time and energy and your sleeping pattern, and making sure that you're, first of all, taking care of yourself, but finding this balance of, what is the limit of burnout and not getting burnt out. So we were able to design the total market cap token and have Chris Espinoza, as a smart contract developer, do most of the development on that. And then we had it, audited by QuantStamp, and we were able to launch it this April of 2021.
I was on mute. So why did you initially think it couldn't work?
Well, it's an index of everything, and you can't really hold everything, right? You can't. My immediate idea was like, okay, so it's like a basket, and you want to have 1,000 cryptocurrencies in it or more, but some of those it's like very difficult to get, and it just seemed really complicated. And Joe's more of like a finance guy, not really a technical guy, so it's just like I don't know. I don't know about this idea. It's a little bit crazy, but we were able to come up with a solution that kind of makes sense. So I'll explain how TCAP comes into existence.
Mm-hmm.
It is a crypto collateralized synthetic asset. So the price of total market cap, let's say the total market cap is $2.4 trillion. We basically divide that number by 10 billion to come up with a number $240. And that's the price of total market cap, right? That's what it's supposed to be. But the way we do this is that we use a collateralization method where we back it by something with real value. So in this case, we have allowed TCAP to be backed by ETH or DAI, the DAI stablecoin, and it's over collateralized by 200%. So you need for every dollar in TCAP that you create or exists, there's $2 that back it at a minimum. And with this, we're kind of ensured that, all right, well, we're not just making up money, right? There's something that's backing it. It can be redeemed for that backing collateral at any time by one of the vault owners. And it really borrows some of the ideas from early MakerDAO CDP vaults or collateralized deposition vaults. You lock up some collateral, you draw out TCAP, which you can freely do whatever with. You still owe some TCAP back to your vault. And you'd want to pay that back at a later date to be able to draw out your collateral. So why would you want to do this? so if you'd want to do this because you may be long on ETH relative to the total market cap, right? So I can borrow total market cap token by creating into existence, and then I can sell it right away for ETH. And then later, as the price of ETH rises relative to the total market cap, I can go buy those back at a later date, kind of at a discount. And then ideally, if I was correct, then I had paid my debt back in TCAP and I have extra ETH left over. The other opportunity is that these assets, the total market cap, trades on secondary markets where there isn't a true price, provided by some oracle. There isn't a true price. It kind of fluctuates based on human behavior. So you'll see that maybe TCAP is trading too high, right? People are buying it up. It's a bull market. The true price is $240, but it's trading on SushiSwap at $280. Well, there's a $40 right away, a $40 value capture if you're able to sell the TCAP at the higher price, and then it drifts back to its pegged price, and you're able to then pay back your debt later, realizing basically a $40 gain on those TCAPs that you sold. So that's kind of how TCAP comes into existence, and why it's not really this like funny money thing. It actually has something backing it.
Oh, that's interesting. So it offers, besides the ability to hold this kind of index fund of like crypto, it also, by minting it, allows you to effectively go long ETH versus the rest of crypto.
Mm-hmm. Yeah, that's the use case for being a vault owner or kind of minting TCAP into existence. If you're somebody who's long on all of cryptos, you just buy it up in the secondary market. That's really the primary use case. But we have these basically engaged individuals who want to enable the protocol to do this. And there's also a little bit of money to be made that if the secondary market's trading differently than what it's supposed to be, you're able to essentially close that gap.
Right. And so how do you maintain the price of the token?
Yeah, exactly. So the vaults have a true price, right? That is derived from the total market cap. And this value comes from a set of on-chain oracles. These happen to be powered by Chainlink. Mm-hmm. We have 5 sources of data they come from, and I can never remember them off the top of my head. It's like CoinGecko, CoinMarketCap, and Nomics, and a few other ones. And that is committed on-chain by 9 individual oracle operators. And we take the median value of that, and that's the true price that we consider for the total market cap.
Okay. So like CoinGecko, CoinMarketCap, Nomics, like all these sources, they are reporting, say, 2.4 trillion is the total crypto market cap. Oracles get that, commit that on chain, and then that kind of communicates to the token, and that's kind of what sets the price of the token. But that's kind of divided by what did you like? Because the token's price isn't actually 2.4 trillion, right? It's like 240 or something. So exactly. It would be like that divided by 100 billion or something.
Yeah, exactly right. It's divided by 10 billion. We call that the divisor, and that makes TCAP a more digestible price. If TCAP was literally the price of the total market being 2.4 trillion, nobody could ever own the whole thing, or even close to that. It would be such a small value. It'd be kind of silly to think about, but we can really reason about it. If it's $240, it's a really easy digestible number. And when we started this, it was like $30 or something like that. Wow. When we started talking about it. So it's come quite a long way. Yeah, for sure.
And then the other option I saw on the website is to farm on TCAP, and we had a tutorial on the Defiant as well on how to do that. So you can go check that out. But if you can talk about that as well.
Yeah, so the goal with Cryptex is that we wanted to launch this thing and do it in true, decentralized fashion. We wanted it to be trust minimalized. We wanted to be decentralized, and we wanted it to be an open organization, right? So TCAP launched with the Cryptex DAO. So we have a DAO voting token called CTX or Cryptex. And this gives you basically voting rights for governance proposals, to make decisions within the DAO. So the Cryptex protocol is run by community members. The CTX or Cryptex tokens are distributed to community members through various incentives. At the moment, we have incentive programs with SushiSwap, where if you provide liquidity of TCAP and ETH on SushiSwap and stake those liquidity positions with the Cryptex protocol, you're earning CTX. And at the time of recording, this is about 60% APY for ETH and TCAP. And there's a second program where if you then take those rewards that you've earned and put those towards the liquidity pool for CTX and ETH, you can stake those and be earning as much as 250% APY. And those APYs are paid out in Cryptex, as some of them vest towards the end of the incentive programs, which run about 6 months. The goal there is to reward people for providing liquidity and making TCAP accessible for those who want to buy it on the secondary market, but also, to distribute these voting rights and really build the community. We want people to help run Cryptex. It's not run by the Cryptex team. We did build the original stuff, and we have a lot of really exciting ideas coming out, but ultimately it's an open organization, and we want the community to be as involved as possible.
So what kind of governance decisions can token holders make?
So token holders can influence any changeable aspect of the system. So let's say, for example, the collateralization ratio is currently 200% for ETH vaults. We have a proposal up on the forums, so like a non-committal proposal, where we're suggesting, should we lower this to 150%, meaning that you're able to draw out more TCAP for your collateral. And since ETH and TCAP move pretty similar, you're not going to see one significantly drop without the other also dropping. They kind of move or rise rather. They move in the same direction. So maybe we don't need as much of a safety margin, but that's one thing we're voting on. Other things we could consider are, what should the next incentive programs be? We want the Cryptex development team has some ideas of upgrading the vaults to make them more efficient, more useful, more interesting. And we also have ideas for other types of products that can leverage the same framework that we've built with TCAP. So other synthetic assets that are built with some Oracle price, have true price, and that are collateralized in some kind of vault.
So you're considering making other indices, like tokenized indices?
Yeah, that's right. Yeah, that's the idea. I can't really reveal anything just yet, but that's kind of the idea. Is we know that there are a lot of really interesting things out there that people want to get exposure to. Maybe that's because they're interested in sort of a long-term bet, or maybe they really just want to gamble with some short-term aspect of something in the blockchain. But I can say that we have several ideas we're working on, and we're working on fleshing out a formal roadmap. Those ideas for the second, third, fourth, fifth product will be coming out in the near future. The Cryptex development team has a lot of cool ideas in the works.
Nice. And then do token holders get a percentage of like trading fees? Like how does like the development team, token holders make money from this?
Yeah, so in the current vault design, there's a flat fee for burning TCAP, and that's 1% of the value paid in ETH, and those fees go directly to the DAO's treasury. So if you think about it in that way, that the token holders own the DAO and the DAO owns the treasury, they're getting paid in that manner, and those fees can be used for a number of things. And I haven't looked in a little while, but the fees earned so far are something like $750,000 already since April. So it's not a small amount of money for something that's still in its early phases. So yeah, definitely CTX holders are at an advantage by being able to direct what should we do or what should be done with those funds that are improving the best interest of the protocol.
Very cool. How much TVL do you have?
Let's see. So we did, when we launched this in early April, it peaked out at almost $100 million in TVL. Since then, with some early incentive programs have ended, and the price of ETH is going a little crazy. I think it's around 30 million or maybe a bit lower, around 15 million. I don't recall at the moment, but it's definitely at its earliest stages. So we're not too focused on TVL. What we're really focused on are the number of holders of TCAP and bringing more liquidity to the program, and really trying to, the end goal here is to make this accessible to everyone, so that your retail investors, people who are interested in buying the cryptocurrencies, but they don't know the difference between Ethereum and Ethereum Classic, so they buy both. But really, they only were interested in Ethereum. They just say, I know Ethereum, I know cryptos, I want to buy into that. That's sort of what TCAP is supposed to solve, is help those kind of people get exposure to everything.
Yeah, no, it makes sense. So, I mean, right now, I guess like the main thing preventing more people becoming involved is just like the gas fees. Did you consider like going to layer 2, or like how are you thinking about that problem?
Yeah, well.
I mean, it is kind of, like all of your job is thinking about that problem, but for Cryptex.
I will say these gas fees they suck, and I'm sorry it's taking so long with ETH2, but we're going to do it right, and ETH2 is going to help with the gas. But in the meantime, we are kind of thinking about, what can we do to make this a little bit more enjoyable and less expensive? So layer 2, certainly something we're looking at. I think Polygon's a good solution. There's a lot of big projects are going there. And like gas is like 400 Gwei right now. And with ETH reaching all-time highs, like just creating a vault without having done anything yet it's too expensive. Even swaps, if you wanted to buy $100-$200 worth of Cryptex or TCAP, you're spending almost an equal amount in gas. So it's kind of a difficult time for dApp developers or DeFi developers, and we're all kind of going through this learning process of how do we get more users, and how do we make it more interesting for them without having to pay so much for gas. So we don't have anything in progress yet, but it's something we're really thinking about. We did have like a time last week where gas went back down to like $30-$40, and we were like, oh, it's over. But then I don't know what's going on. Some meme tokens are launching, and now it's 400 Gwei. So yeah, the gas, yeah, we're really feeling the gas problem.
Yeah. Yeah, like I also thought like, oh my God, yeah, like Ethereum is back.
Yeah.
And now it's like worse than ever.
It's so crazy because I remember a time when I refused to pay more than 10 Gwei for a transaction. And I'm looking back and I was like, oh, here's one where I paid 1.15. And I thought that was like a pretty good deal. And now I'm like, oh, if it's under 100 Gwei, I'm going to do it. It's just
crazy.
wild.
Yeah. I also, wanted to ask you, like this, like DeFi cycle has brought on, I think like one of the main innovations has been these liquidity incentives, and you're like using them as well for Cryptex and TCAP. Would love to kind of hear your like findings on that. Like, how do you think liquidity mining and like yield farming will evolve? Like, is it here to stay, or like, yeah, like what are your initial insights?
So as a DeFi developer, we're trying to figure out the right pieces of game theory to make this work, because in the end it all relies on human behavior, right? We have developed this thing which has a price, but someone has to be willing to lock up this collateral, and there has to be some incentives to do that. So liquidity is very valuable to a DeFi project. It helps people, get a piece of it without incurring a lot of slippage, getting the appropriate rate for something they're buying. But what's really been interesting is the launch of Uniswap's V3 model of liquidity, where you can have focused capital around a certain price. And when it comes to something like TCAP, where it's supposed to have a certain price, that makes $1 million of liquidity go a lot farther if it's focused around a narrow band around that price. So at Cryptex, we're really trying to figure out how can we leverage this new model of Uniswap, where we say, all right, we want to provide incentives for liquidity and encourage people to have the most narrow and efficient band that is practical to keep TCAP around its true price, the Oracle price. So I think that we're trying to solve this problem. I'm sure other projects are trying to solve this problem. And I think that if Uniswap V3 becomes the new standard, as Uniswap V2 became the standard, then it's going to really revolutionize how any price pegged token, any stable coin is going to work and do with yield farming, liquidity providing.
Is the idea there that you can still incentivize liquidity, but the amount of like capital required to achieve like the same volume or like stability is much less, so you can do a lot more with like less capital?
Kind of. So with the Uniswap V3 model, you can deploy, let's just say $1 million of capital in, and let's say TCAP is 240. I can put it between 230 and 250, meaning that if you wanted to, and if that was all the capital that was there, if you wanted to drive the price down below 230, you'd have to eat up all that liquidity. Where if I had put in $1 million liquidity in ETH and TCAP, it would be a lot easier to go lower than 230, because I'd only need a portion of those funds to move the price. So what you get out of this is that I put up the same amount of collateral, but I made it harder for the price to move, which means that people who want to buy it are going to be able to get it at the correct price. And it makes it a lot easier for a stable coin. And if you think about TCAP as a stable coin, it's stable relative to the total market. It's supposed to stay with that total market. It should make it easier for it to stay closer to that price. Now, the problem is okay, well, we can tell people, say, please go do this, but without some kind of incentives and with gas fees being the way they are, it has to be somewhat profitable, or a light at the end of the tunnel that'll be profitable beyond just the swap fees. So trying to figure out what's a good liquidity incentive program on top of V3. It's a kind of a cool new challenge in DeFi space, I think.
Yeah. And I mean, the fact that LP tokens are now NFTs also kind of like makes everything different. It'll be really, interesting to see how that the whole space and just like framework evolves.
Yep. Yeah, it was easy when they're all fungible. You say, put your LP tokens here, and I count how many LP tokens did you have over a certain amount of time staked, and I can calculate rewards based on that. But when it comes to this NFT and different capital efficiency model, it's a lot trickier. So another cool problem to solve. That's why I like working on this stuff.
so many like complexities, but fascinating stuff. Okay, we're like already at the hour, but just wanted to get your like big picture thoughts to end this on I guess on Ethereum, since you've been kind of at the core of Ethereum for years now. What do you see this network achieving in the long run? Like what's kind of the end goal? Do you think, like if I don't know, 10 years from now, if like Ethereum made it and it's successful, what does that look like to you?
Yeah, the end goal is that we want to make Ethereum a thing, right? Like right now, some people know about it and they think of it as like a highly speculative asset, and like it's not for me. I don't know what it is. It's a little tricky, and there aren't really a lot of use cases outside of DeFi and a few like blockchain specific programs. But what it could be is something that we all use and all have, and it's accessible just like of a Visa card or MasterCard or some kind of physical payment, transacting. Before those things came out, which came out slowly, it was a very different world. And I think that we're in that different world now. And when Ethereum reaches its potential to be a truly global platform for decentralized applications, that's when we've achieved, the final stages. And that's when we know that Ethereum has made it. I think that we're still super early. There are a lot of interesting problems to solve, both in the DeFi space at the application layer, but at the protocol layer as well. There's just like being someone who's interested in computer science problems. It's just a very fascinating world. And I would say that if you're thinking about a switch in careers and you're tech oriented or even not tech oriented, there's a lot of things you can do. Definitely think about it for a long time, right? Like, work on it in your spare time if you can, really get involved and see where that initial curiosity will take you. Because for some people like myself, it took me all the way, it changed my life. I'm here working on full time. It's all I ever think about. It's all I ever do. And it wasn't ever, and still really isn't, about making a lot of money. It's about changing the world. So.
Nice. I like that. I like that way to end things. And same here, by the way. I also went full into this stuff, and can't stop thinking about it. Great, Preston. Thank you so much. This was such an interesting conversation. Really appreciate you taking the time.
Yeah, happy to be here. Nice to see you again. We're on Zoom chat, and I know this is audio, but it's just great to connect. It's been a long time.
Yeah. All right. Thanks again.
See ya.